The yield curve inversion hits the highest since 1994. Zach, thank you so much for that, but I saw that in the news. I just don't know what it means, and why is your thumbnail so happy? Isn't that a bad thing? I'll tell you why. Let's get into the video. What yield curve are we talking about? The yield curve that we're talking about is the bonds yield curve. Bonds are usually issued by institutions, the government, a company to borrow money. When you want to borrow money as an individual, what you do is you go to the bank and say, hey, I would like to buy a house. Can I have some money, please? And the bank at that point will loan you the money for an interest rate. That interest rate is called yield for the bank. And the money you're borrowing from them usually comes from investors. Talking about buying a house, the Toronto Regional Real Estate Board is going to releasing their November numbers very soon, and I'm making a video on that. Are we going to see another nosedive, or is it going to be a recovery? Did we hit the bottom? So stay tuned. We'll cover that in that video. Going back to bonds, if a company wants to borrow money, they can issue bonds or they can sell shares. In the case of a country though, a country cannot sell shares because it's not a corporation and you can't own a little bit of the country. Arguably, one of their only options is to issue bonds, and that's how money is printed. It's the government borrowing money from people and paying an interest back. These bonds, which have several names, depends on their maturity date, so it can be called treasury bills, it could be called notes, bonds, but to keep the video simple, we're gonna call all of it bonds. So these bonds will have a yield. That is pretty much the amount you're going to be getting paid, and these bonds then are sold on the open market. When you buy a bond from the government, you're basically giving them your money as a loan, and the government starts paying you an interest. These bonds have different maturity dates. For example, there's some that are for 2 years, some for 5, some for 10. Since this is sold in the open market, yields change, and economists use that yield to predict recessions. For example, this graph from Bank of Canada shows both the 2-year and the 10-year yield plotted on the graph over time. And as you can see, there are points where the 2-year yield goes above the 10-year. A nicer graph that I got from BNN shows the same graph, however they have the 2-year yield as a straight line. The 10-year yield is relative to that. And you can see in that graph, every time before a recession, the 10-year yield dipped below the 2-year. Now you can look at this in two ways. People are anticipating that the economy is not going to do well, the Federal Reserve, the central banks, to drop their interest rates again. So what would you want to do in that case? To get a bond from the government for the longest possible time because the rates are at their highest. The second way you can look at it is the Federal Reserve and the central banks are pushing the short-term yield up by increasing the interest rates. Whichever way you look at it, apparently this has predicted recessions 100%. But since this yield curve already inverted, why is it on the news now? It's a day before Big Daddy Tiff makes his announcement on the policy rate change. So I have my theories on this. I do want to hear from you, so let me know in the comments below why that is. A recession is usually a good opportunity for people who have planned for it, which means if you've sitting on cash, this is basically Black Friday for the economy. You can buy assets at a discounted rate. We're very happy for you. And for the rest of us who did not plan for
Congratulations. You played yourself.
The good news is that this is a sign interest rates are going to come back down. You can look at it as the light is at the end of the tunnel. With recent headlines such as Bank of Canada is losing money for the first time ever, and 50% of mortgages hit their trigger rates, pushing banks to bail out those mortgages, the next rate hike announcement will definitely tell us so much more about what's in store for us for 2023. I made a video on hitting the trigger rate and what are your options when the bank calls. So if you want to watch that, click here. I have a feeling you're going to love it. And for the rest of you, thank you so much for watching. I'll see you in the next one. Bye.